Aloha, big wave trading family. It's probably going to be another long weekend video lesson as we got a lot to go over. First off, I want to really quickly run through these charts. This is a chart of the SPY representing the S&P 500. This is the chart of the Dow Jones Industrial Average. Notice the attempt to retake new highs and the rollover on strong volume. Notice the red BOP in both the SPY and DIA. QQQ, you can see it's been ugly ever since June. Look at all the big, tall red volume bars and look at the overall structure of the rollover. Very, very ugly. And then the Russell 2000, very little follow through at all yesterday. More heavy volume. More work was done in the bottom end of the intraday range and the top end on Friday. And this index is under a hard sell signal, but along with the Dow Jones Transportation Average. But as you can see, the rest of the market does not look good either. There's the NYSE, there's the biotech stocks, just overall a lot of weakness. So it's odd that with all this weakness, I got a ton of long signals on Friday. Now, before we go into them, I want to make it very clear. All of the MACD and RSI 14 oscillators that I track, that track the momentum and trends of these indexes, are heading lower, with not one single one oversold but the MACD and the Russell 2000. And even with that being the case, there is no curl, turn, hook higher off those lows to indicate that there is any real bounce coming. We're nearing the end of August. We still have the entire month of September to go through and the first 2 to 3 weeks of October to go through, where seasonality is historically very poor. So there's a lot of things weighing against going long here. So before I go over these long positions, remember, new traders, cash is king here. You don't have to trade. But if you're like me and you place anywhere from $1,000 to $80,000 per trade, 1 to 20% using the asset allocation capital based on the 2016 lows. I have not readjusted the initial amount invested because there has not been a 20% pullback anywhere in the market. When that happens, then the initial long position will go from anywhere from $1,000 all the way to potentially $100,000 if we get a 20% signal. But keep in mind, right now, investing anywhere from 1K to 80K, it's only always going to cost me $1 to $2. So I know how to position size accordingly. I know how to trade in a market model where all my operational models are under sell signals. I know to keep long positions small. And if I do increase them to a larger size, I know that I'm working with some very tight risk parameters. So keep all of that in mind as we go over the long positions. Let's get started. CBPO. Beautiful bounce attempt. Let me open this price pattern up just a little bit more. You can see what's going on here. Why isn't that open? There we go. There's the open bar. So you can see that it closed higher than where it opened. More intraday work was done in the top range. Huge surge in volume. Big surge in BOP. It's a pretty clear oversold swing trade position. First profit target, if you want to keep it safe, can be these recent August highs. Then you can play it all the way up to the 50-day moving average, these recent highs, the 200-day moving average, these recent highs, these recent highs, these recent highs. There's a lot of different areas to work with. But if you do take it long, you got to follow the parameters. You got to use a limit order anywhere from the low a day to 90.48. 90.48 is the most I'm willing to pay. And if it breaks below 88.25, I will be completely out of CBPO, risking about 2% to make a potential 20%. So here we go. 10 to 1 reward risk ratio. Even in this market environment, I'd rather take it and be wrong than not take it and watch CBPO trade up to 100 without me. I'd feel like an idiot for not taking a signal like this just because the market's weakened. And now going back to the market, while the market looks like it wants to completely die and while sentiment's not too extreme, the put call ratio on Thursday did hit 1.18 and it closed Friday at 1.14, indicating some extreme fear in the short term. We'll see if that continues. But sticking with the swing trade ideas, MRO, 1% of my account capital into this stock. Also the same pattern as CBPO. Want to get long, limit order 1091. And if it goes below 1055, I'll be completely out. Once again, risking about 2%, and maybe it can get back up here. That's a 15% move. Maybe it can get all the way back up to where the 200-day moving average is, and we're looking about a 26% move. So once again, that 10-to-1 reward risk ratio with the BOP surge, the volume surge, and the candle work, I gotta get long CBPO and MRO and rather be proven that I'm wrong on this trade idea before not taking it and then seeing it run without me. So those are the swing trade positions. Now for the momentum positions, there's tons of them. ERI, beautiful pullback right to the pivot point of the breakout level. Want to get long at 2230. First cut loss 2170. Final cut loss can be the 50-day moving average or the low here 2040. And then of course, like I'm going to say on every single one of these stocks that I now go through from ERI on, if the first cut loss level fails, either all of the stop on this last position or half of it of whatever's remaining will be raised to the new low. The odds of this low failing and then this low coming into play on the entire rest of the position on any of the longs I go through after this is slim to none. If the first level goes, I'm moving stops up. I'm not wasting any time. I'm not asking any questions. Stops get raised because of the way that the condition the market's in. Short term, maybe have some fear via the VIX, maybe via the put call. Can't bank on that with the way that the indexes and oscillators look. So ERI, 2230, 2170, 2040. Once again, looking at any of the previous measured moves to the risk, we're looking at over 5-to-1, potential 10-to-1 reward risk ratio, especially if you use these November lows. I mean, think about it. If I'm wrong on the first half and I lose 2%, to potentially get another 100% move, I'd feel stupid if I didn't take this long position at work just because the market looked weak. The market's looked weak a lot in 2017 and it bounces immediately. Not sure why this time would be any difference. People are pretty bearish out there. Normally markets top after you have a blow-off climax run, which we have not had yet, and when the crowd thinks that no matter what, the market's going to rally. It seems like we're really walking on eggshells here. Next one is SNI. SNI is a play based on DISCA. They've been purchased by Disca. Disca's got that oversold bounce look here. It looks like it's just been beaten down. Got the oversold swing trade idea. And when I combine that with the stronger stock that they purchased, SNI, I want to get long SNI. Limit order 8606, the highest first cut loss. Boom. Right there, 85.20. After that, I'm immediately moving up my stops. And my final cut loss for now, because I'm not quite sure where to have it, it's just around those lows right there. God, that's a horrible trend line. But it's the lows right here at 82.25. Like I said, this low goes. The odds that this comes in play is slim to none because I'm basically working off Disca. So whatever becomes the new low, if the first low fails, that'll probably be the new final low. Then there's COL, also gap up. Finding support right at that gap up low. Want to get long COL 124.52. First cut loss is the low a day. It moves below the low a day. I'll be moving up the rest of my stop. But for now, I'm going to have a very wide final stop. Not sure if it's going to be at 111.79. If the 50-day moving average is below it, that's where it'll be. If the 50-day moving average, which is not shown here, I got to look at stockcharts.com, is above it. That'll be my final cut loss on COL. So 124.52, 121.46, 111.79 or the 50-day moving average final, and I'll start to move stops ups immediately if they fail. Then there's CWBC. Nice CANSOM quality bank stock, pocket pivot point signal around 50-day moving average. Very thin stock, but I love this recent BOP volume and price action since that pocket pivot point signal here, when combined with the longer term daily and weekly chart, this thing looks coiled as shit, and it could easily double, and I risk actually under 1.5%. Similar situation. First off, CWBC limit order 1030. First cut loss 1005. Final cut loss 995. I think it's back here somewhere, or maybe here. It's 995. And then similar to that, GNBC, another bank stock. Look at that previous measured move uptrend, 120+%. What do I risk if I'm wrong? Right around 3%. GNBC getting long 2205. First cut loss 2120, final cut loss the 50-day moving average. Fails the first low on this stock, as long as it has green BOP, I'm going to let the 50-day moving average come into play before I raise stops, as long as volume is lower and it holds green BOP. Then the final one, EVBG. Already tried this one back here, got shaken out of it. thought about maybe getting long here, rallied higher, pulled back. Now it's got a candle over candle pattern, above average volume. BOP not confirming, but I really like this Zoom 4 chart. Really like this Zoom 5 chart. And going back all the way to November lows, once again, looks like it's coiling. Potential measured move of 79 to 80%. And what do I risk on the first position if I'm wrong? About 2%. And then on the entire position, if it would all fail in one day, slightly over 5%. Like I said, this loss gets here, let's go here, I'll be moving up stocks. But there are a ton of potential long positions for you to take on Monday. I don't know if any of them are going to work. Worst case scenario, the market pulls back, 3 out of 4 fail, but hopefully the goal is, by keeping my stops so tight, that even if 3 out of 4 fail, the one that works will make up for the 3 losses. So the goal is, maybe CBPO fails, negative 2%. Maybe ERI fails, negative 2%. Maybe SNI fails, negative 1%. I lose 5% on those trades, and then maybe COL moves up 20%. I'm up 15% overall with only a 25% win-loss ratio. So that's the goal. If all of these fail, back to the drawing board. Cash is king. We're raising cash. Don't forget I put on those hedges on Friday. They all filled. All 14 of 14 stops held. So even if the market sells off, I'm hedged a little bit. But it's interesting to see what happens here. I think it's insane that I received so many long signals to go along with speculative long signals that I'm also taking. I don't even want to list those for everybody because there's just no way anybody can track as many long positions as I can track on an end-of-day basis out here on Maui. If anybody has a few $100 million they want me to run, I'm more than willing to take that over. So for right now, the end-of-day stuff, a lot of these patterns look really good on the short term, but when the market looks like this, the rest of them could fail. However, every time the market looks like it's about to break wide open, it finds support and rally. But this time, it looks a little bit more sinister on every single index. Not one looks better than they have before whenever they did bounce.